Broadcast is now starting. All attendees are in listen-only mode.
Hello, everyone, and welcome to this Nadex webinar. It is an introduction to knockout options, binary options, and the new Nadex platform. With the craziness in the markets, we have had a large increase in new customers or even former customers becoming coming back and existing customers becoming infinitely more active, and everyone's looking for some foundational information, bringing them back into the world of binary options, knockout options, and definitely the new Nadex platform with some incredible functionality, particularly around charting and technical analysis. Thank you all for joining today. Just up front, we are recording this, and the recording will be available both on the Nadex website under the on-demand section of webinars, as well as our YouTube channel. In fact, I might even show you that because we did something pretty cool recently. We had an entire virtual education summit, a 2-day summit uh, on a day of basics and a day of advanced concepts. In fact, if you missed that, I'm going to show you where you can find that on the Nadex YouTube channel. You'll also find those individual sessions. We did break them out into individual recordings to make it easier to consume and digest, but I will show you where you can find those on the Nadex YouTube channel because you may want to go back and check that out. All right, before I jump into what we're going to do today, I do have to let you know that this session, as are all of our sessions, are brought to you by our compliance department, and this is actually really important. So I don't want to make light of it, but trading does involve risk, and any trading that you do is solely your own responsibility. Now, one thing I do very much like to point out is that this is an educational session. I am going to be showing you necessarily live markets. And as I go through my examples, I don't want you to construe anything that I say as a buy or sell recommendation. I am doing this strictly for your educational purposes. So educational only. Please don't take this as a buy or sell recommendation. So what are we going to cover in today's session? Oh wait, before did we skip something? We did. Oh, you know what? Before I get over to the agenda, I do like to point out that we're here to help. We do sessions like this. We have 2 standard webinars every week. Every Tuesday, we have a great partner of ours, Brian Caprice from Keep Trading Simple, who does a great review of analyzing opportunities in Nadex markets. He does that every Tuesday. So if you want to get a breakdown of what's going on in the marketplace and how you might potentially want to think about leveraging that information in the Nadex markets, join Brian every Tuesday. And then we do this welcome session, an introduction to binaries and knockouts, as well as the Nadex platform. We do this once a week, and you might want to join occasionally because we're always putting new functionality into our platform and making it better. Now, while we do that, we also are here to help you. If you've got any questions, you know what, today, if you type questions into the question box, I will try to get to them at the end of the day. And I'll do my best to I'll make best efforts to answer everyone's questions, but you can always reach out to us. We are here to support you in your journey. Give us a phone call, shoot us an email, customerservice@nadex.com. We even on our website have chat functionality, and I'll even show that to you when we jump over to the platform. So we're trying to make it as easy as we can for you to reach out if you've got any questions and need any assistance. At Nadex, we are here to help and support you on your journey. Now, what are we actually going to cover today? I am going to define knockouts and go through some examples. I am going to do that in a real-time live market environment. and actually it'll be in a demo environment, but it is live market data. And then we're going to do the same for binaries. And as I go through that, I will come back and focus on the charting functionality. In fact, I'm going to bring that up throughout the entire process because the way that people trade knockouts and binaries, they do use a lot of technical analysis looking for key entry and exit levels. And with Nadex charts and our pre-built technical analysis tools, as well as some drawing tools, we can help you make your own decisions. And I really want to show you that functionality and make sure that you can connect the dots between what these products are, how you can trade them, and then how you can formulate your own opinion about trading these markets, because in the end, that's really what matters, your opinion. So, all right, with that, I am now going to switch screens and I am going to jump over to the Nadex website. And by the way, it wouldn't hurt. I just want to make sure, if anyone's having technical difficulties, we've had occasional issues with sound. We are delivering this over the internet. And so if you're having any issues with that, please refresh your browser. In fact, if you wanted to just chime in, hey, everything sounds great. Wouldn't hurt, so I know I'm coming through loud and clear. You can just put something in the little questions box saying, hey, I can hear you. Or everything looks good. Whatever you want to put in there would help. All right, excellent. Thank you all. Thank you all. Okay, so here we are. We are on the Nadex website. I am going to put a little teaser out there. We are refreshing our website, so very soon, hopefully, you're going to see a shiny new Nadex website that is sleeker, cleaner, and hopefully easier to use, and hopefully you like it. So keep your eye out for that. I did mention. Oh, you know what? I think I'm zoomed in a little too close here. Let's. How do I zoom back out? There we go. I did mention that we have this this chat functionality down here in the bottom right hand corner. If you can see where my mouse is, I am going to actually click and open that up, and you can chat with us. So some new functionality, making it easier for you to speak with us, or however you want to, whatever support you're looking for. Please reach out to us. It's the best way for us to be able to help you. I did mention that we recorded everything up here in our webinar section. I just kind of want to point it out that you can find all the recordings from our virtual education day. You'll find them up there, day 2 and day 1. All the topics that we covered. You'll also find them on the Nadex YouTube channel. If you go to YouTube and just look for Nadex, I think our top playlist right now is the Virtual Education Summit. So you can actually play it in order. In fact, again, you know what? I might as well just show that to you very quickly. If we go to the Nadex YouTube channel, here we are on YouTube, on the Nadex YouTube channel. If you've never been there, please follow us. We're constantly putting new content up there. But here you see it, the Virtual Education Summit. All right, basic and advanced, and all of the entire day, we broke them out into their individual sessions, are up here. So please, if you like, and you want to go back and review all of it or any one of those sessions, you'll also find it there. Okay, so now let's go ahead and get into, I'm going to make this so it's easier for you to see as well. And again, if you've got any questions as we go along the way, by all means, please type them in. Again, I will make best efforts to get to those questions. If I see them throughout my session, a lot of times I'm focusing on what I'm doing. I will try to take a peek at those at the end. All right, so when we are here, I am going to log into the platform up here in the right-hand corner. And when I click login, it will bring me to the login page. Now, when I mention the new Nadex platform, notice right now you can log into our current platform. I'm telling you, we are going to be moving everyone to this new, cleaner, sleeker, I think a little bit more intuitive, user-friendly experience, and we currently call it the beta. So I would actually recommend you to use it. It's you might as well start using it sooner rather than later. So I'm going to click on join the beta. Uh, if you don't have a demo account, and as I go throughout this and you're brand new to Nadex, you can open a demo account as well as, if you prefer, a live account where you fund it and you actually start trading with your own money. But if you're brand new, I would recommend play with the demo account. All right, and you'll notice that I am in a demo environment. It says demo up here. Now, the reason I point that out is while we pump the live prices from the live markets into a demo environment, your experience in a demo environment is not going to be the same as a live environment. There's different eyeballs. Sometimes the data isn't as robust. Because it is just a demo environment, but it is a great way for you to learn how to navigate the platform as well as get familiar with the products. You can do some test trades. In fact, we'll probably put some demo trades on today just as I work my way through so you can follow along. And it is a great way to practice and for you to build some foundational skills and get comfortable with it before you go into the live markets. So I did want to point that out, though, that we are in a demo environment. Now, when you first bring the platform up, you'll notice the platform's broken up into 3 sections. We've got our markets over here on the left, right? And the markets are broken into our 3 core products: binary options, call spreads, and knockout options. I am going to start today with knockout options because I think they are the most intuitive. I think it's a terrific product. I think you'll understand them pretty cleanly. It probably translates to a lot of other trading that you've done. And then I'm going to jump over to binary options, which Nadex is the only regulated operating binary options exchange in the United States. We are operating, we offer binary options, and we are the only one that's regulated that's operating. There are some overseas offshore options that people might find, and in that regard, I would always say, because it is not regulated, buyer beware. Always buyer beware. With Nadex, we are CFTC regulated in the United States. Now, we have our markets on the left. We have your positions and orders and history down below, and I will probably be opening and closing those throughout the session. And then here's your core workspace, which is where your charts and your order ticket are going to be. Those two, and we're going to be populating, and that's probably where we're going to be focusing most of our efforts. So let's start with knockout options. All right, and the question is what is a knockout option? And actually, I'm going to show you what a knockout option is because it's easier once you see it for you to understand it. When I click on knockouts, we do have knockouts across various products, indices, foreign exchange, our commodity knockouts, crude oil, very popular, particularly when the oil markets went crazy. A lot of other more traditional brokers, they had to put their customers on liquidation only because the volatility in the crude oil markets was too extreme and they couldn't handle the risk. Because all of Nadex products are defined risk, defined reward up front, we had lit markets through that experience. And so a lot of people looking to gain access to the price of crude oil came to Nadex because we had them. And we had that access. I am actually going to do indices today because the markets move too, and you can trade the markets. You'll notice that we've got 4 indices for knockouts. Now the titles might be a little strange, but you know each one of these products. The US 500 is the S&P 500, and it does settle to the S&P 500 future. The US small cap is the Russell 2000. That settles to the Russell 2000 future. Or against, not to, against. The US Tech 100 is the NASDAQ 100. So it's the NASDAQ. That settles against the NASDAQ 100 future. And then the Wall Street 30 is the Dow Jones Industrial Average. I'm going to go ahead and use the US 500, the S&P 500. I'm going to click on that, and it's going to bring up 4 options for knockouts. It doesn't matter which one I pick right now. I am just going to click on one to populate our workspace. So I clicked on one. Now let's take a look at what knockouts are. And I am going to move some things away. I'm hiding it. If you notice these double blue lines, when I click on them, I'm making the workspace a little bigger so that you can see a little better. All right, what we are looking at here is a chart of the S&P 500. And you'll notice when I clicked on a knockout, it did put up an order ticket here on the right. Okay. And by the way, if anyone's curious, you can have multiple order tickets and multiple charts. So if you've got, I'm working off of one screen right now, but you can see the tear off up here. If I wanted to have 3 charts up because I had multiple screens, I could tear them off and put charts on different screens so I can monitor different markets at the same time. Same goes with order tickets. So if you were looking at 3 different markets and you weren't quite sure where you were going to trade at any moment, you can have multiple order tickets and charts up, particularly for people who've got screen real estate across multiple screens. All right, when we look at knockouts, I picked a product and it tells me what that product is. It tells me it's the S&P 500, the US 500, and it gives me a range, 3093 to 3143. And it also tells me when this contract expires. When we do knockout options, we do them as weekly products. All right, and then so if I had started earlier, there would have been 5 days to go in this. And you see, this one expires in 1 day and 3 hours. It expires tomorrow afternoon. Because that's what it is. It expires at the end of the week. Now, what are the blue lines that I'm looking at? What is this range? And that range is when you trade a knockout, you are trading the price of the underlying. It is direct price exposure to the underlying product. So in this case, we're trading the price of the S&P 500. And if we think the S&P 500 is going to be going higher, you simply buy. Okay, you'd click buy. If you thought it was going lower, you would want to sell. So you see you've got a two-sided market that you can either sell at, you can buy at, and the truth is you can, if you want, put an order in between. You don't have to trade exactly on those prices. You might not get a fill, but you can trade in between. So let's just for fun say I thought this was going higher, okay, and I'm just picking that for random, and I click buy. I can actually put a price in at 31.10.70. So here's 31.10.70. Okay, it's it's moving so quickly. I want to put one. How about 31.11? How's that? I place my order. Notice how it says 31.11. That is the order I just placed. In fact, if I go down here and I can see that I've got an order to buy one of these at 31.11. Okay, now I'm just going to leave that out there for the moment. You can see the market's actually trending higher at the moment, but that doesn't matter. I just wanted to show you that you can place an order in between. I might not get a trade, and this is a demo environment, not a live environment. Who knows? I mean, they're very different. So, but you don't have to necessarily always trade on the bid or the ask. Now, what am I looking at for a knockout? Here I was just assuming that I would buy one. So I said, hey, I want to buy one of these. What are the levels, these blue levels? If I bought one at 31.11, I mean, we're just making an assumption here. I'm looking for the S&P 500 to go higher. Now, with a knockout, you do have a target range. My target is I'm looking for it to hit this upper boundary, which is 31.43, and you can see it right here on the chart. If I bought one of these at 31.11 and it went up to 31.43, I could potentially make $320. Notice how we give that to you right on the order ticket up front too. You know what your maximum potential profit is up front. Now, on the flip side, let's say I bought one of these and it went down. It went against me. Not every trade works in your favor, does it? And it were to go down, and the lower boundary here on this knockout is 30.93. I would get knocked out of my trade. So it's essentially a stop loss below with no slippage. If it touches 30.93, this contract will settle, and that is it. And here, since I had, if I theoretically bought one at 31.11, my maximum potential loss was $180. Now, if you notice, there are, in the S&P 500, this is 50 points wide, 3093 to 3143. And so this contract, the maximum notional value for this knockout is $500, and you see that in the risk reward. The total between the maximum potential profit or the maximum potential loss is $500. So what is a knockout? A knockout is you're trading the price of the underlying, and you get knocked out of the trade if it touches one of the boundaries. You either get knocked out for a profit if it goes your way, or you get knocked out for a loss if it goes against you. That's if I'm buying it, right? Now, if I were to sell it, okay, I think this is going lower, and not that I want to sell it, and I'm just going to show you. Notice how everything is inverted. If I made this 31.11, if I sold one at 31.11, I thought it was going lower. I'm looking to potentially make $180 because I wanted to get down here and just touch 30. I just wanted to get a touchdown at 30.93. Okay, which yesterday it was, and then it rallied. So, and as you can see in the chart. But if I'm wrong and it goes all the way up to 31.43, that's when I would get knocked out for my maximum loss of 320. Now, the immediate question is going to be, what happens if between the time I buy it or sell it right now and it goes to settlement, it goes to expiration, and it doesn't touch either one of these? Right? What'll happen is it will settle. So right now, you can see from Thursday, from today, it hasn't touched. It got close to touching this one earlier today, but it could just go sideways and stay in this channel through tomorrow for the next 1 day and 3 hours. If I bought one at 31.11, which by the way, I think I accidentally did. Yeah, let's take a quick look. You're right. Notice how I left that order in. It's now a position. Somehow that got filled when I wasn't looking. It did dip down and we got filled. So fun. We'll monitor that throughout this session. If it stays in between, the profit and loss on that trade that I just did would be the difference between where I bought, in this case, and where it settles. So I bought one at 31.11. If it settles above 31.11 and never touches up here and never touches down here, if it settles above 31.11, I will have some profit. So I could potentially make something as long as the Nasdaq 100, just kind of trends higher throughout today and tomorrow. If it does drop, I know that I'm stopped out at a loss at 30.93. So if something cuckoo or crazy were to happen, and I know that I can't, actually I bought. So let's just make this a buy at 31.11 so that our numbers are, which is actually where I bought it. I know on this trade, I can't lose more than $180. That was it. That's my maximum loss on this trade. And if it gets up to 31.43, I could potentially make $320. And if it just goes higher than 31.11 and eventually settles, I will make some profit. All right. And the difference will be from the price it settles at and 31.11 where I bought. If it closes below 31.11, all right, so let's say it settles tomorrow down here at 3,100, I will have some loss. I won't have my maximum loss. I would have lost, I think the math would be about $110. I wouldn't lose all 180. I would have only lost 110. But I know that my maximum potential loss was limited. That is the cool thing about knockouts. They are entirely defined risk, defined reward trades where I get knocked out at a profit goal or I get stopped out at a max loss where I don't want to lose anymore. I was simply wrong. And it can settle in between. Again, you're trading the price of the underlying. Now, the interesting thing there is I don't have to wait until expiration or settlement to see what happens. If this continues to trade a little higher, I bought it at 31.11, maybe at the end of the session it's trading at 31.20 and I just want to take a quick profit, I could trade out of it. Just because there's a settlement, just because it expires in 1 day and 3 hours, does not mean I have to wait 1 day and 3 hours to see what happens. If this trade goes in my favor and I want to take a partial profit because I don't think it's going any higher, I'm allowed to do that. I can trade out of it. Conversely, if this goes against me, all right, we're sitting here and watching, and let's say it starts trending lower and starts heading towards 3,100, and I go, you know what? I'm wrong. I changed my mind. I changed my opinion. I don't want to wait and get knocked out for my maximum potential loss. I could always choose to trade out of it, take a partial loss. So very important with knockouts. This is also true with call spreads and binaries. Just because there's an expiration or settlement with the contract does not mean you have to wait until then to see what happens. You can always trade out early. And with knockouts, it is very clean. I am taking a directional play on the price of the S&P 500, and notice how it gives me an indicative price. It's 31.1225. Notice how the bid ask is right around the current indicative price. And you see that current indicative price right here on your chart as well. Now, with knockouts, as I mentioned, you saw up front, there were 4 different kinds of knockouts, 4 different ranges. You can pick the range where the risk reward suits you the best. If I wanted to choose a different one, notice how on the chart itself, it shows me with 4 blue lines where these knockout levels are. If I wanted to choose one where my stop loss was a little tighter, I don't want to lose $180, but I do think it's going up, maybe I choose this one, which is the 3103, 3153. Notice here, I mean, again, the total contract's only worth $500, but if I bought one right here, all right, now this happened earlier today. If somebody had bought one earlier today, all right, and they bought this level, they actually did get knocked out right here. This contract settled, and if someone had bought one earlier in the day, right in here, right where it is right now, they would have gotten knocked out for their maximum loss, which was, if you actually, let's make this 3111. I want to make let's keep the math all the same. Here we are, and by the way, we're right back down here at this 3111 level. If they had bought one at 3111 earlier in the day, okay, it would have gotten knocked out and they would have had an $80 loss. All right, and they weren't sure. I mean, it got knocked out. It did rally back. All right, but in a knockout, you are knocked out because you don't know if it's going to keep going lower. In fact, it rallied back above and then it knocked out again. And in this little spike, it might have, people might have been getting a little nervous that it comes all the way back down here. So with a knockout, you're getting into the trade with defined risk, defined reward, and you can choose how much risk you're willing to take. I mean, if you think it's going higher from here, and you don't, but you don't want to experience any more than $80 in loss, this might be a better choice for you where you would get knocked out. If it went down to 3103, so it is kind of a little tight, but you're not going to lose any more than 80, but you're really looking for it to rally and keep going higher. Notice when I did that though, my potential profit went up because my knockout level above went from 3143 up to 3153. So it just gave it more room to run to the upside if I happen to be on the right side and the S&P 500 takes off and goes up in the next 1 day and 3 hours. Now, conversely, if you wanted to sell this, you thought it was going lower, here I'm just going to choose one that's a little closer to the range of where, the top end of the range. Here, if I wanted to sell one at 31.11, let's just put that price right back in there. I kind of like that. All right, so if I were to sell one in this range, here, and we're right in the middle of the range. I mean, very, very close to the middle of the range on this one, where if it did rally up to 31.33, I'm knocked out for $220 loss. But if I'm looking for it to come back down to where it was yesterday or earlier in the week, all right, so I might want to see it, drop down here. I could potentially make 280. So it is a directional play. You are trading the price of the underlying. It's very easy to understand. It's very intuitive to understand. I'm either buying or selling, and I've got knockout levels. That is why I like knockouts. particularly in some of the, and I'm going to go to these commodities, particularly in, things like crude, where, it can be very volatile. And we've seen that as of late. Well, let's just take a look, a little longer chart here. I'm going to look at let's look at right, a 2-hour chart and zoom it down some. I mean, oil's gone all over the place. I mean, when you look at it as a percentage move, from we know it actually went to zero a while back, which is, it can happen. There's reasons for that. But I mean, this thing traded down to zero. Here it is at 30. Here it is up at 30, almost 37. I mean, that's a 20% move. So knockouts are a way to make a decision, take a direction on the price of an underlying asset, but do so in a very defined risk, defined reward way. There won't ever be a margin call or anything like that. You know what you're getting into up front. All right, now I want to change gears a little bit because, while I mean, I love knockouts, and that's why I kind of spend some time with them. Let's take a look at binary options instead. So now I'm going to jump over to binaries, and I'm going to go back to our indices again. Now notice that we've got other choices here, and we've also got a lot of different time frames. Binary options for, we've got 2-hour windows for some of these indexes. We've got daily, we've got weekly. Now, what I would like to show you on binaries is we even have much shorter term durations where the price action gets pretty significant. Here, I'm going to go into, for 20 minutes, it's all for indexes. All right, these are 20-minute binaries on indexes, and I'm going to go through what these numbers mean in a second because it's different. You're not trading the actual price. You're trading the probability of something being true or not. And we even have very short-term ones. And I will, when I finish with binaries, we will play around. These are in foreign exchange pairs. And this is when you'll really get an understanding of the price action that you can get, the exciting market of binary options. So let's actually just take a look. I'm going to bring up an index. I'm going to choose the weekly one again, this again in the S&P 500. And I'm going to, let's just pick one that's at the money right here, 63.25. I'm going to click on that, and I'm going to, oh no, this is the FTSE. I apologize. This is the FTSE. I was going to do the S&P. Let's do the S&P weekly, just because that's what we were doing earlier, and I think I don't want to confuse things. Let's 3102. Okay. I am now going to hide that again, and let's take a look at what we are looking at. You know what? I'm going to shrink this down from 2 hours. I'm going to go back to our 10-minute chart because it's easier to see the different products. Okay. Now, what is a binary option? A binary option has two choices, yes or no, and it will settle with two choices, either 0 or 100. So a binary option, I clicked on a binary option and I'm on the S&P 500. And again, this one's the weekly, expires in 1 day and 3 hours. And when I click on it, it tells me, what am I predicting? Here, you're making a prediction. So you are trading, what do you think is going to happen? What do you think is going to happen? And my question here is, will the S&P finish higher than 310250? Okay, then higher at the end of the week. And it's a simple proposition. It's a proposition where you're making a prediction. Will it finish higher? Will it settle higher? Not is it going to trade up or is it going to trade down, but in the end, will it be higher than 310250? If I think yes, I buy it. Now, I'm going to go ahead and put a price in between to buy, and let's just choose 55 because it's in the middle. Because these are much smaller contracts. The notional value on a binary option is only $100. The total value is $100. And what you're trading is the probability, excuse me, is the probability that that answer is true. If I think it is going to settle higher than 500, and notice when I clicked on buy, the chart turned blue where I need the S&P 500 to be for this to settle at 100. If I bought one at 55, all right, because it can go to 0, that's my risk. I am risking $55. All right, my risk is $55 that if it settles below 31 0250, this will go to zero, and I will have paid 55 for something that settled at zero. I will lose $55. If, however, it settles above 310250, I paid 55 for it. It goes to 100, and it doesn't matter how far above. It doesn't matter. It could settle up here at 3140. It could settle at 3160. It could settle at 310251. Okay, and just as long as it's higher, it settles at 100. And so if it goes to 100, I paid 55 for it, my maximum profit is $45. So in this proposition, in this prediction, I am risking, that's what I'm trading, is the probability of this being true. I'm risking 55 to make 45. And that is because I bought it and I think it's going to go higher. Now, on the other hand, if I thought it were going to go lower, I could sell it. And let's put a sell at 55. And I'm like, no, I actually think this thing's going to go down. And it doesn't matter if it trades below, it's got to settle there. It's what happens at settlement. So if I were to sell one at 55, here, I would need it to go down and settle at 310250 or lower. Okay, and if it did settle at 310250 or lower, if I sold it at 55 and it goes to zero, I keep my $55. If I sell it at 55 and it settles above 310250, it goes to 100 and I lose my $45. So you know exactly what's going to happen, what potentially could happen. It's either 0 or 100. It is binary. People understand this concept. It's heads or tails. It either goes above or it goes below. And if I bought it, I want it to settle above. And if it goes, if I sold it, I want to have it settle below. So you can buy or sell them. You are making a prediction. Is it going to be above or below a certain level? And what you'll notice is it's the probabilities of this. Notice how just above, is it going to settle above 3126.50? Okay. Now, it's already down. It's currently down at 3105. All right. We see it's actually selling off right now. It's down at 3105. And the probability that it gets back up and settles above 3126.50, the market is only giving it about a 1920. It's right in between the bid ask spread. See how it's 17? It's 20%. Right now, the market is saying 20%. Now, if I thought it's going to rally some, maybe I want to buy one of these. It's going to cost me less. Let's put a 20 in here. Now, it's a lower probability of being true, all right? But I'm only risking $20. Where if it actually rallies and settles in 1 day and 3 hours above 3126.50, it would go from currently the 20% probability to 100, and so I could potentially make 80. Now, as I mentioned with knockouts, the same is true with binaries. Just because there's an expiration doesn't mean I need to wait. If I were to buy one of these at 20, I pay at a 20% probability, so I only risk 20, and between now and sometime tomorrow, anytime, let's say it rallies up and it starts trading right near 3126. What's the probability that would it settle above or below? It's going to be just like it is right now, roughly, where we're down close to this 3102 level, right? With our current indicative price at 3106, right? So it's above. This is a little higher than a 50% probability now. It's still above. It's trading 3106. This is 3102, so it's $4 or $5 points in the money. Notice how it's trading above, just above a 50% probability. If I bought one of these at 20 and the S&P 500 rallied up here, this would probably go to a 50% probability, at which point I could sell it if I wanted to. I don't have to wonder what's going to happen. If I bought one at a 20% and it did rally up to this price right here, and I didn't know what was going to happen, and this was around a 50% probability, I could try to sell it at a 50% probability, and I would make $30 and be out of the trade. And I don't have to wait and see, well, am I going to make my full 80? Do I need to make my full 80? or am I going to let my 20, I risk 20, I'm prepared to lose all of it. But you can trade these, right, all the way through until it settles. Very important. Just because there's an expiration doesn't mean I have to wait. And the probability that it's going to be true or not will fluctuate as you get closer to settlement or as volatility increases or decreases. Now, I mentioned that I was going to show you these 5 minutes so you can really get a glimpse at how the volatilities can change as you get very close. I am just going to pick one. Let's pick the Euro US dollar, and let's just pick one of these right now. This is a 5-minute binary. All right. There's 4 minutes and 15 seconds left. Let's zoom in on this chart and oh, I'm zooming out. I'm going to zoom in on this chart and let's bring it down here so you can really see what's going on. You can see there's been some volatility here, and I do want to see these. In fact, let's make this a 1-minute chart. And that might make it a little easier. And I want you to watch how the probabilities of here we go. Here's three binaries. There's 3 minutes and 40 seconds left. And notice how right now, this 113.27 is 70%, and as it ticks higher, well, actually, watch this. As it ticks higher, this 113.29. Oh, look at it, as it moves away, it dropped. This was just trading up near 40% probability, but as the prices drop down and as there's less time, this probability is dropping into the 30s. All right, into the mid 30s, and it might drop down if the indicative price keeps ticking lower. Look how quickly now it's in the 20s. It's ticking lower. This keeps going down. Now, notice as that's happening, this one, which was that was previously 75% probability, has dropped. It's now in the upper 60s. So you can see how the probability of whether this is going to be true or not, as you get right towards settlement, the probabilities on these are going to fluctuate pretty dramatically. And there is some great price action. What are you looking for? Now it's like a horse race. There's 2.5 minutes, 2 minutes and 25 seconds, and you're going to watch these probabilities change pretty dramatically. And if the Euro US dollar moves, we're going to watch these probabilities, and as it moves away from this will go closer and closer to zero, and this will settle at zero if it closes below, right? Because my prediction is, will it close above? So if you thought it was going to stay below, you could sell one of these right now, looking to make potentially 20. In fact, here, let's just kind of go show you. I don't think it's going to make it, so I'm going to sell one. Oh, look at that! It's ticking down pretty quickly. I can't even. Do I have any? Oh, I do have a position. So let's cancel these other orders. Delete the order. I did manage to I sold 2 of those. Okay. And that was just for fun. I didn't, I'm no buy, sell, or hold recommendation here. I just wanted to show you that I sold those for an average price of just around 13. And I'm watching here with 1 minute and 16 seconds to go. The probabilities will tick up and down based on what we think oil is going to do. And look at this, time goes further, this is going to go closer and closer to just being zero. And the one that's kind of really coming into play is this 113.27, where it's right now a 50-50 proposition. We don't know what's going to happen in the next 51 seconds. Now, I will tell you that I just want to get this chart because it's ticking around in here. As you get into the last 30 seconds on binaries, the prices do kind of disappear, because at that point, no one's really prepared to say what kind of risk they want to take, because anything can happen. It goes to 0 and 100 in a blink. And look at this. Look at it's rallying here pretty dramatically. Oh, wait, we got 22 seconds. And see, I told you, in the last 20 seconds, it's simply just going to disappear because no one can really predict what's going to happen. But you saw how the volatility in these jumped around. And as we go into the last 8 seconds, this one here, if it stays where it is, this one will go to 100. This one will settle at 100. And this one up here that I sold is going to settle at, and it expired. All right. So it expired. And so I actually made, I took my profit there on that one. Notice how it settled. I'm going to look at I sold two of those and I got, I sold one at 20 and one at 14, or I can't even, I'd have to go back through, but I sold two of those and I made a profit because it didn't, I'm going to get rid of this here. It didn't settle. I'll look at it rallying now and look at now it's changing. That one that and so what happens every 5 minutes is these will then reset and these become new contracts. Oh, let's bring that up. There it is. I had to click back on it to tell you this one's up. And so now it's another 5 minutes of exciting price action on what's going to happen. What's the probability that it's going to close above here or above here or above here? And you can either buy and if it settles above whatever, it settles at 100. And if it doesn't, it goes to 0, or I can sell. And if it actually makes it above, you lose, it goes to 100. But if I sell it and it doesn't settle above that price, it goes to 0, and I make the profit at the price that I sold. So hopefully that helped you with binaries and knockouts. I did mention I want to get into some charting functionality. I think it's going to be a little easier if I move away from these very volatile 5-minute binaries. So let's just go ahead and let's just go back to the S&P 500, and I'm just going to put any chart up. It doesn't really particularly matter because I'm going to move the markets aside. Actually, I want to put the knockout up there on it because it's kind of fun to be able to see that as we look at the charts. I'm going to hide these again. Let's zoom out. Okay, so we can get let's not use a 1 minute. Let's go ahead and use a 1 hour. That's going to be a little easier, and we can zoom in. There we go. Now, I am just, again, I'm not making buy, sell, or hold recommendations here, but here is, the knockout for the S&P 500. And if you wanted to try to make if you wanted to develop your own opinion of where there are levels where you might want to buy or sell, we do have a bunch of technical analysis indicators on our charts. You can take a look. Here are all the different indicators. We do have some education on most of these. If you're looking for more education on these, our partner, dailyfx.com, does a lot of education on technical indicators. But you can put any of these on your charts. For instance, if you like to look at moving averages. I'm just going to go ahead and click on moving averages, and you're looking for mean reversion, where you think the price of something is going to move back to its moving average at some point. You can use this as a tool. Notice when we bring it up, you see your moving average down here on the left-hand side, and it comes pre-populated with your standard 20 bar, 50 bar, and 100 bar moving averages. You can customize these. You can add some. You can change what color they are. But here you're looking at, since it's 20, it's 20 1-hour bars, 50 and 100, and you can see where has the average price of the S&P 500 been as of late. And lately it's been rallying and it's been trading above its moving averages. And at some point, the theory on moving averages is, it's called mean reversion, is that at some point it will move back to its average, and you can try to either pick levels to buy or sell. Other things that you can do, we have all sorts of drawing tools. I'm just going to bring one up. If you were looking for to build your own support and resistance levels on a chart, all right. So now I'm going to go back and let's just take a look at a 15-minute chart. I'm going to zoom here a little bit, and again, I like doing this so you can see what the levels are. But let's go ahead and click on a drawing tool, and I might want to draw my own trend, either my trend lines, or I clicked on trend, and you can clearly see this is an uptrend where I click on it, and I can sort of draw and fit my own trend where I think it's going to see some resistance. That's a trend line, and you can see I just drew that on there. and that can help you make some decisions. If it's clearly in an uptrend, you might want to look to do that. If you wanted to put multiple trend lines on there to fit a your own channels. Here, I just put another trend line on there where I'm putting my own little channel on there where I might see some resistance, where I might want to sell, and where I might theoretically see some support. If you wanted to build your own channels without doing them as individual lines, we actually have, there we go, channels. And you can put your own channels on here where I'm going to put this in between, and it'll even shade it for me. I'm not really paying a lot of attention to where I was putting that, but I just wanted to show you that you can build your own channels to try to identify levels. You can also use vertical lines, by the way. People look for support and resistance. I keep on going onto that. I want to do my drawings. Maybe you just want to do a horizontal line and pick your own levels of support and resistance. Where I just drew a vertical line right here where I thought maybe, hey, it saw some resistance here and some support here. You can do that as well, or I'm just going to do one that's more popular. Let's clear all of our drawings so that we don't have too much of a crazy chart. Let's even get rid of our moving averages, and I'm going to just draw a Fibonacci retracement. All right, where people, this is the mathematical, if you want to, and by the way, if you're not certain what any of these things are, at least on our indicators, notice how there's an I for education. You can get a little bit more. Same goes for our drawing tools. But if you weren't certain what Fibonacci was, so let's go ahead and do a Fibonacci retracement. Since this is an uptrend, I'm going to start down here in the bottom left-hand corner, and then I'm going to go and say, hey, where am I seeing this trend? And it will draw the mathematical Fibonacci levels where you might see support and resistance. All right, and the theory is here, I'm just going to show you in the middle of this chart, there was a range in here on these Fibonacci retracement levels where this line was support, right? And this line here was resistance. And after it tested at 1, 2, 3, on the fourth time, it actually broke through and kept going. And notice that it went all the way up to this Fibonacci retracement level, and then it's been testing that. It tested it once, it tested it twice, it tested it a third time. That might have helped you make some trading decisions that, oh, maybe when it got to here, I'd want to take a short position on these knockouts. And this is where it comes in handy, where you can choose which knockout level you wanted. So, this might have been one where you sold. This is actually a perfect knockout where, one time you could have sold it up here at 30 and known that you were stopped out if it kept going higher. But you were able to potentially make a profit. You were able to do it twice. In fact, you were able to do it 3 times. It hit that thing 3 times. The fourth time, it may just break through, and it could be a breakout level. So again, you've got to do your own analysis. You got to do your own homework. But we do have tools available to you to help you do your analysis. And this is why I happen to really like this, where you can see I can choose which knockout level I want based upon what I'm seeing on my own technical analysis using indicators or drawings. All right, with that, again, this session was recorded. You'll be able to see the recording on on Nadex.com as well as the Nadex YouTube channel. I do want to kind of jump over, and I'm going to see if I can't answer any of the questions that I might have missed. Let me just take a quick little peek here. Actually, this is an important question. How do you settle a knockout early? A knockout will only settle early if it touches one of the boundaries. So if I sold this knockout right now, this 31.33 to 30.83, 31.33, it would only settle early if it touched one of the boundaries. If it touched 31.33, it settles. If it touches 30.83, it settles. That's it. The contract is over. A new knockout contract will be added. So we'll always have 4 knockout ranges. So you always have 4 choices to choose from, but that's the only way that would early settle is if it touched one of the boundaries. Early in a week, when there's a whole week to go, it will probably touch one of the boundaries. As you get closer to the settlement on a Friday, it may or may not touch one of the boundaries, particularly as you get closer to actual settlement time. Here we still have a day and 3 hours. Now, that being said, remember, just because there's an expiration doesn't mean you have to wait to expiration in order to actually do anything. You can always trade out of a position early. And with that, I know we ran over today a bit, but hopefully you enjoyed this session. Thank you for your engagement, and take a look at upcoming webinars on the webinar section of nadex.com. And I want to wish you all good luck in the markets.